With Wealth for Life, there is a little bit of personal care.
We didn't go through the investing, and I don't think we'd be where we are today.
I would never go to a bank directly again.
Let's do it together.
They're giving me more confidence.
We feel totally secure now.
It was just easy.
There's a capability there that we didn't even know we had.
Stressful wise, Anthony's always there.
After the first meeting, those fears were gone.
They make us comfortable before we made the next step to invest.
Who wants to work until they're 80? Seriously.
We actually have seen the benefits.
It's like nothing's changed, but we're getting wealthier every day.
They've laid out the plan out for the next 20 years and
looks great.
And I know exactly where I'm going.
They really are the real deal.
We feel included.
I'm able to retire at a very young age.
We're in the process of building our dream home after 18 years being stuck in the one home.
Financial independence for us and for our children.
Build something for our son, Rocco.
And set up our kids' futures as well.
Set themselves up for life.
They were amazing.
So certainly will make a big difference to you.
They changed our lives.
We feel included.
Go to Wealth for Life. Full stop.
Hi, my name's Anthony Peluso, CEO and founder of Wealth for Life. Here we are, 2021. Have we all recovered from 2020 or are we still stuck in 2020? The question I get asked the most is, what's in store for the real estate market in 2021? So, I'm going to tell you guys the current state of the real estate market. Something I predicted this time last year. So, what's driving the market right now? Number one, the current interest rates. Unless you've been living under a rock, interest rates right now are the lowest they've been for 51 years. I think it was back in the 60s where you had interest rates this low. Now, when money's so cheap, more people can afford to invest or to buy their own home. And let's just keep in mind that the real estate market is actually driven by homeowners, okay, not investors, okay? Yes, we talk about investing a lot, but the real drivers of the market are homeowners, okay? First homeowners, people that are upgrading, downsizing, but basically owner-occupiers drive the real estate market. And the ratios are roughly 70% homeowners and 30% investors. Now, there's a little bit of a clue there with regards to where you should be investing, okay? So interest rates are at an all-time low. Now, as long as interest rates stay in this current state, and I personally don't believe they're going to get any lower, now may be a good time to potentially think about fixing your interest rates, but please don't go making that move without talking your financial advisor first, or your mortgage broker or your banker, because it's not for everybody, okay? There's pros and cons of fixing interest rates, but as long as interest rates are this low and continue to stay this low, you're going to have a pretty hot market, okay? And what do I mean by that? Well, if you can fix your interest rates today over the next 3 to 5 years for, say, 3%, that's a pretty good indication of where rates are going to be and a really good indicator of what the market is going to do over the next 3 to 5 years. I personally believe that the market, especially in Melbourne and Sydney, is going to do very well up until around 2025, and we will have a bit of a plateau in 26, 27, okay? I can get into more detail as to why and the research and the data that we have to back that up, which we do. It's not an opinion. And a lot of it is done by understanding global markets, the Australian economy, the Reserve Bank's monetary policy, and consumer spending and behavior, okay? Because here's the reality. What you've seen over the last few years, for those of you that have been in the game long enough, you've seen this happen before. For seasoned investors, this is nothing new, okay? What we went through in 2020 with COVID, obviously that was a once-in-a-lifetime thing, right? But in terms of the way the economy and the markets reacted and performed, we've seen this all before. Okay, and when you go through something multiple times, number one, you know how to prepare for it the next time, and number two, more importantly, you know how to take advantage of it, and that's what a lot of people did in 2020. Right? So, interest rates right now, no doubt, are fueling the market. Okay, more people can afford to borrow because they can afford the repayments. Okay. Now, you also got to be careful when it comes to that, because as an investor and even as an owner-occupier, you have to understand that at some point interest rates are going to go up. Okay? That's just a reality. So don't make decisions based on good times, right? And one of the things we teach to our investors through our education programs is how to survive or how to flourish and prosper when the market is tough, right? When the economy changes. Because good real estate, really good real estate continues to perform, right, when the economy changes, right? When unemployment goes up, when interest rates go up, when rents get tampered with a little bit, right, and have to be adjusted, good real estate continues to grow. So when you're making a decision around investing, ask yourself this question: is this still a good investment if interest rates were to go to 5%, 6%, 7%? Is this a good investment if my income dropped by 20%? Is this a good investment if my rent dropped by 20%? Okay? So these are considerations that you need to take into place when investing in real estate. Don't go looking at what interest rates are today, because it's attractive for a lot of people right now. But you got to invest. It's got to look good based on a worst case scenario. So if things do change, you don't get impacted. You don't have to stress out. You don't have to worry. More importantly, you don't have to sell. Okay? So take advantage of the cheap money. You are crazy. Absolutely crazy keeping money in the bank right now. I know it makes you feel good, but this is how it works. Right? You put $100,000 in the bank, okay? What do they give you for it right now? 1%, 2%, which gets eaten up by inflation and tax. I, as an investor, go to the bank, I borrow your $100,000, the bank charges me, 3%? I take it out onto the market, I make 12%. I'm making money on your money, the banks are making money on your money, you're making zero on your money. This is why it's crazy to keep your money in the bank. Now, I get that you need to have liquid reserves there for emergencies and so forth. I understand that. I'm not saying deplete your reserves, right? But your money's not working for you whilst it's sitting in the bank. It's asleep. Okay? So keep in there what you need to feel comfortable, to sleep comfortably at night. But the rest, get it working for you. Okay? When you can borrow at Jesus, what are some of the rates right now? Like 1.7% principal and interest, fixed for 3 years, is what some of the lenders are offering. You're getting loan to value ratios of 95%. It's attractive right now. Take advantage of this. You're never going to see money this cheap again. Especially, if you're in your 40s and 50s, you won't see rates this cheap again. It makes no sense to sit there as a spectator and watch and wait and do nothing when money is so cheap. Why would you borrow money at 6% when you can get it today at 2.5%, 3%? Okay? And as long as interest rates are this low, there's going to be a ton of activity. Look at banks right now. For most banks, just to review an application, it's taking 8 weeks. This tells you about the amount of traffic and the amount of funding that's going through banks right now. Everybody's applying for a home loan or an investment loan. Okay? So there's a lot of activity going on in the real estate market right now because interest rates are low, and that's going to continue. Okay? So I don't know about you, but if you can get money at 2%, 3% right now, and you can get it to work at 10, 12%, you're ahead. Even at 7%, you're ahead. Okay? So interest rates are fueling the market right now. Unemployment. When you look at 2020 and the fallout of 2020, we all went into panic. JobKeeper kicked in and helped a lot of businesses out. Unfortunately, it wasn't able to save every business and every employee, but JobKeeper kicked in, helped a lot of businesses out. There is a continuation or a version of JobKeeper right now that's still in the market, but unemployment right now is relatively back to a stable condition. So much so that it's not really affecting a majority of the market. Yes, there are still some industries right now. If you look at the commercial industry right now, I know that a lot of people are getting laid off in the commercial real estate industry right now. So it's certainly not helping every industry, but a majority of the industries right now in Australia, unemployment really isn't stopping people from spending. Okay, consumer sentiment right now is quite good when it comes to overall spending and investing. Hence the amount of loans that are going through banks right now. The like if you have a look at Australia, last quarter the Australian market grew by 5.8%, which is the most that's done since October 2003. Regional dwellings, that market grew by 11.8% in the last quarter. And the top end of town properties, specifically in Melbourne and Sydney, did 8.8% just in the last quarter in terms of increased in values. So you've got a pretty buoyant market right now. The other thing that's also attractive is, or good to see because it's one of the very strong indicators, is auction clearance results. Okay? So if you ever want to look at where our market's heading, pay attention to what's clearing under the hammer on a weekend, right? Or these days they have auctions pretty much every day, right? But when they start to get into the mid-80, 85 and above clearance rates, that is a very, very strong market, okay? So most of the stimulus packages that the governments were offering last year and up until March, some of the packages like the home builder boost, they're now gone. So we'll start to see a bit of a correction in the market, okay? You've still got the first homeowners grant, both metro and regional, 10% of $10,000 and $20,000 respectively. So that's still fueling a lot of the market, but predominantly low interest rates right now are actually, are the big driver of the market right now. There's a lot of stock right now that's highly in demand. In fact, some of the good real estate that we source and we buy off the market right now. It's impossible to let it hit the market because it just disappears. Okay, it moves so quickly that it doesn't even hit the market. So, because of our networks and connections and the fact that we've been doing this for such a long time, we're able to take property off the market before it goes into the hands of the general public, because the good stuff is disappearing very, very quickly. So, you've got a very good market in Australia, and again, predominantly in Melbourne and Sydney. For those of you guys that have been following me, there's reasons why I say stick to Melbourne, Sydney, okay? As an investor, I actually don't like risk, okay? It may be surprising for you guys to hear that, but I actually don't like risk. And I certainly don't like to put my clients at risk, okay? I tend to go with what works, okay? And I've studied the Australian property market now going back to the 1950s. And I understand what drives the market. I know what kind of properties you need to buy to outperform the rest of the market. And when you look at population, when you look at employment, when you look at infrastructure, when you look at planned infrastructure, have a look at where our government is spending its money, rolling out major projects, you will tend to find that it sits in Sydney, Melbourne, and parts of Brisbane, right? But that eastern seaboard is a very, very strong place to invest, okay? Does it mean that the rest of Australia is no good? Of course not, okay? Anything right now is better than keeping your money in the bank. If you've got money in the bank right now, you don't understand the money game, okay? You don't understand that whilst you've got money in the bank and it makes you feel good, your money's going backwards, because inflation's eating into it when you've got inflation sitting at 2.5%, 2.7%, and then you've got to pay tax on the interest you earn. How much have you really made on your money? All right? So keep that in mind, okay? Because you're actually investing your money by keeping it in the bank. You're just getting a very, very poor or zero return. Now, a lot of you, one of the questions I get asked the most, based on the feedback we get, is how to get started in investing in real estate. Now, I haven't told anybody this, but I'm putting together a program, an educational program, where you'll be able to do it online and look at it online, and it gives you the exact steps, step by step, to get started in the real estate market as an investor. The things you need to do, the basic principles, the basic fundamentals that you need to have to get started as a real estate investor. And it's a lot more than just going out and buying real estate, okay? Because the biggest mistake that a lot of people make is that you think it's just about property. I've been doing this for 20 years, actually longer. I've been doing it every day for 20 years. Not because it's a job, because I love what I do. So I understand the market, I understand how to invest. More importantly, I understand how to create wealth from investing. And there's a lot more to it than just investing in real estate, just buying real estate. If you think that all you need to know is about property, you won't make a lot of money, because that's the mindset I had. And I wasn't doing very well when I first started to invest in real estate, because I was missing the most important parts of becoming an investor. Okay, so I'm going to teach this to you, the fundamentals of investing in real estate, the ABCs, the things you need to have in place so you can't get hurt financially. Think of it like a check sheet. You just follow each step and you become a successful investor. Okay, so I'm going to release that program in the next few months. Look out for that. It's going to be a ripper. It's my 20 years of investing in real estate across all markets, buying all types of real estate. And it'll just show you guys how to get into the market, right? To put that first foot forward without getting hurt. How to stack the odds in your favor. And the most important thing you're going to learn, you won't make the mistakes that I made. Because my mistakes cost me a lot of money. And the mistakes that other people make when they jump into the real estate market, okay? If you understand this, you will avoid these, and you can follow this step-by-step blueprint so you can have amazing success in real estate like I've had and like our clients have had. All right, so guys, I hope you got a lot out of that. Thank you for your feedback. Thank you for your questions. We always want to educate you guys. There's a lot that's going on in the market right now. Both with established real estate, with off-the-plan real estate purchases, with apartments and townhouses and house and land and all types of dwelling in the commercial real estate market. Stay tuned, keep in touch with us. Have a look at our website, wealthforlife.com.au. Click on the link. Sit down with one of our consultants. It costs you guys nothing to come in, say hello, and have a look at whether this is something that's right for you. Because you know what? It may not be right for you, or it could be, but don't sit at home wondering. Give us a call or click onto our website, wealthforlife.com.au. Talk to one of our guys here and find out whether this is right for you. Is it a great market to invest in right now? Absolutely, okay? But you still need to follow the fundamentals. You don't just want to go out there and buy anything. Because one of the things about real estate is that you must understand why you are doing this. It's interesting when I ask people, why do you want to invest in property? It's the first. If you talk to me, the first question I will ask you is, why do you want to invest in real estate? Why invest in property? And I get some very interesting answers. I want to do it for wealth creation. I want to do it for retirement. I want to do this. I want to do that. I want to look after my kids. I want to replace my income. I don't want to work so hard. I want to reduce my hours at work, and so on and so on. And the question I always come back is you need to understand why you're doing this, okay? And the reason for that is you need to be able to measure whether it's successful or not. Okay? Having 10 properties means nothing if you still have to work for a living and work till the age of 65 or 70. Okay? Having 10 investment property is really nothing if you don't know how to measure whether that is successful or not. Okay? So this is one of the things that we help you with, is to understand your end goal. And I'm not talking about retirement or getting to an age of 65 or anything like that, because that may be different for a lot of people. But what does the end result look like? What does success look like for you? And how do we measure that what you've done is successful? If you can't measure it, then it doesn't matter what you do, right? You can just invest in anything because it won't matter, because you're never going to know how to measure whether it's working or successful, okay? So for a lot of people, not everyone, but for a lot of people, their aim is to replace their working income with some sort of passive income, okay? Be it, real estate income, shares, dividends, business income. and have it reoccurring, meaning passive income, but have it reoccurring every year. Okay, so it's not just a one lump sum, and once you've eaten through all the money, you've got nothing left. That's pretty silly as well, right? But have that income reoccurring every year. Now that's one of the first things that we actually sit down and work out with you, right? So what is it that freedom? Because that's what it's all about, by the way, guys. It's not about money. It's not about real estate. It's about that F word, okay? Freedom, okay? What does freedom look like for you? So we spend a little bit of time understanding what that looks like for you, and then we work backwards in terms of what you need to do and who you need to be to achieve that in the time frame allocated or agreed upon. It's that simple. This is the thing. I've never understood why people think real estate is so complex. It's actually quite simple. What's difficult is that people don't know why they're investing in real estate. So they buy property without really understanding how to exit, how to manage the cash flow, how to look for the gains, how to increase their rent, how to duplicate over and over and over so they can achieve a predictable result, which is usually replacing their working income with investment income. Once you understand what the end looks like, believe me, everything else is actually quite simple and, more importantly, quite predictable. All right, hope you got a lot out of that, guys. wealthforlife.com.au. Click on the link below or above or to the left or the right. Talk to one of our guys. It's a great time right now to invest in the market. Very, very cheap money. If you know how to take that money from the bank, steal it from the bank, which is what you're literally doing right now at 2.5%, 3%. Steal it from the bank. They're letting you steal it, by the way. If you ever wanted to rob a bank, now's the time. Okay, go and rob a bank right now. Actually, I got to watch what I say there, right? Don't rob a bank, right? But go and borrow from a bank right now at 2, 3%, even less if you know what you're doing, and get that money to work for you. Do it for you. Do it for your boyfriend, your girlfriend, your husband, your wife, your family, your children. Could you imagine if your money worked as hard as you do? Imagine your money getting up at 5:30 in the morning, right? Working till 7:30 at night, 6 days a week. Imagine if your money worked as hard as you do. Where would you be financially right now? Keeping your money in the bank means your money never wakes up out of bed. Get your money working for you, guys. wealthforlife.com.au, 1300 793 877. Nobody calls us anymore. They all just go onto our website or find us on social media. But whichever one works for you, get in touch with us. Talk to one of our guys here, be it Jake, be it Craig, be it Anna, be it Peter, be it even me. And have a chat to us about how we can replace your working income with investment income. Thanks, guys. Have a great day, great night from wherever you're watching. I'll see you real soon.